Hey, it's Mac with PriceActionTradingSystem.com, and this is Wednesday, January the 30th. This will be our chart lesson for today, and it's about 1 o'clock when I'm doing this today, and as you can see, it appears that this is going to be a trading range day, regardless of what the day is really two-thirds over, so I would describe this as a trading range day for the most part. It doesn't mean we couldn't start trending any minute now and trend strongly in any one direction, but as of now, it's a trading range day. And really all you can do on those kind of days is draw your trend lines just like I've done, and I'll show you how your trend lines help you just like they do on any other day. And you can see this first trend. I drew it off those first couple of bars here. We broke it. Notice that this was right at the 8:30 open, and so that's why it gets a little, people start to get flat, and they're afraid to be in the market at the open. But if you follow the price action, it's all there, and you got a trend line. And what happens when you get a break? You usually get a move to a new high, and then you get a correction, and sometimes you get a reversal. And then now we're trending down to the low side. Look what happens when we get a break. We move down to a new low, and then we reverse. Now we got a trend going here. We get a break. Come back and we test it, and now we seem to be reversing. Will we go back to the high side of the range or come back and test this first? I don't know, but generally if you follow your trend lines, it keeps you on the right side of the market. That's how you keep from getting trapped in this kind of stuff. And I'd rather miss the trade and it go lower than to take a short and get trapped, knowing that we're going to get a retest of the high. And this could have been, and really if you look at this, this could have been enough for the retest right here, and then we could have sold off. But there's not really a good setup here. Notice that you got all this overlap. By the time this really bearish bar, look, you got to go short right here. Look how close that is, those lows, and what happens? It broke lower and trapped everybody and reversed. And so that's a perfect little trap right there, going in the right direction. And plus, let me show you, this is really important. Here's where the market closed yesterday. And let me show you exactly where it opened at 8:30. Somewhere on this bar right here. So we know there's a gap between here and here. And those gaps normally get filled. And look what happened. It went straight to that point. There's your gap. Straight to that point. Filled it. And then turned out. So that should have been a good target right there. And a lot of times when I see those overnight lows, I'll put a sell, especially if it's been a big move up to it. I'll just sell that blindly right there and get short, and then look what happens. I mean, it's almost always good for a scalp, especially if there's previous resistance there. And look at that. Look how many times we've tested that. We tested it 1, 2, 3, 4, 5, 6, 7, 8, 9 times and couldn't get through there. So, that's a good indication of how to trade that. And until you get good at that, don't be trading it blindly, but that's how I entered that trade right there. I exited my longs on a limit order and reversed it, and then just reversed it, and boom. And then so in 2 trades, you get a huge move in both directions. So something to think about. But anyway, let's talk about the trades. The first setup was right here. That's a huge move down. Look at that bar. It's way oversold. Look how far we are away from the EMA. We start to get that overlap. And believe it or not, that right there is a second, excuse me, that's a second entry long. Here's your first entry, your pullback. And notice all the stems down there. It's way away. The ideal way would be to try to get long with a limit order, but we never got that tick lower. So you can go long right there, or you can try to drop a limit order back in here. But you see you would have got left out on this one. Easy scalp. No big runners, because you had to exit when we went into all this stuff, and we could have easily made another leg down. This could have been a, we got this one leg, and then you get a correction. You could have easily got another leg down, and you might have even seen a leg down through here. But notice that there's a break right there, and then we sold off and then corrected. So, follow, use those trend lines. Usually they're off the first couple of bars, first couple of swings, and you can see that break right there, and then boom, we sold off, and then it reversed, and you got the same thing to the other side. So even your short term, while your short term won't always work out, that it won't always be that clear. A lot of times it will be. So just draw them. You know, it doesn't hurt to draw them. If you don't draw them, you have no idea. So you got to draw them. And again, it's usually the first couple of swings or the first couple of bars like this right here. And that's how I draw mine. And on this one, it would have been right off those first couple of bars right there. And there's, you know, it's a skill and it's an art just like the rest of it, and it takes experience, so you'll get better at it. But anyway, that was the first trade. Again, notice how, you know, that's how efficient the market, the ES is. It came just by enough to know that a lot of people entered there and have their break-even stops. And that's why I scalp out and take my money and then move to break even, because what happens, a lot of people trade and they just move their break even and they're trying to catch this move, but the market will come back and take those break even stops and then go to where you think it's going to go. So scalp out, get your money, and then, you know, at the very least, if not, you got to give the market more room, and then you give it a chance to turn into a loser. And that's why I prefer to scalp out, make my money, and then try to hold on to a runner. And guess what? As soon as they ran those stops, look at that reversal. And again, you shouldn't have really been looking for a short here. There was no good short setup. Then you get a reversal based on this break below these two little matching lows here. That's a double bottom. That's a trap when we went lower and turned, and it closed almost one tick off its high. So the more aggressive trader would have tried to go long here, but definitely when you had this opening on the low, closing on the high, that's 2 bars in a row. You want to go long right there and ride that back to the top. And again, you know, my goal was to exit up here. I actually had this all the way up here to begin with, but when these bars close down here, you're getting more touches right there based on the closes, or right there. You get the most touches right there. And so that's exactly where we went to, and that's that overnight close. And so I tried to exit 1 tick in front of that, knowing that there's going to be resistance there and that's likely. Do I know it's going to turn and go down like that? No, but just go study your charts and see how many times it does. And so the odds are on your side. Sometimes you'll be right, sometimes you won't. But you know, if you can enter right there and put a stop right there, you get a very high probability trade with very little risk, you know, less than 4 ticks risk there. But if not, you don't really get an entry, because look, this ends up as a doji, and then it's really suspect entering there, and you see what happened. It went a little lower and it bounced back. And so the only way to enter this trade was this, and believe it or not, this is a breakout pullback short right here. It's a second entry too, because you got your first move down, then you pull back, and then boom. And so it's a second entry short right there. It's a breakout pullback short. So several different reasons to go short right there. Look how bearish that is after a fairly bearish move down. And, you know, you got to figure we're coming to test these lows now, and look where it comes and finds a little resistance. And then it has to slowly work its way on down. And it was really tempting to enter here, and you might have tried to enter here. I think I'm going to use guards going off. And since I brought that up, and this is this is an important one. Let me show you this. This is the FOMC decision. These are big decisions, and it's usually very smart to be flat when these come out. Anything to do with the FOMC, you're better off to be flat, because the market is likely to go very nuts. And that's another thing too. Generally on FOMC days, you very rarely ever have a trending day. Again, nothing is ever written in stone. You can see it all. But generally on FOMC days, and it's going to be curious to see how this goes over here, but generally on FOMC days, people are nervous and they don't know what to do. And so not much happens until that news comes out. And then once it settles down, then the market kind of finds its equilibrium point. So we'll see what happens here, but let's continue with and you can see the market's getting a little nervous over here. Based on the price action, it wouldn't surprise me if we don't go test these highs at least, but it wouldn't surprise me if we don't come back down and test this low either. So we'll see what happens, because we did have this little trend line and a break and a retest, but sometimes you get two legs, and that might be leg one, and now we might get leg two, and that would be right back up here to the highs. So, but again, let's just wait and see what happens. But hopefully that makes sense. There was another setup right here. You might have gone short right here. I didn't like this one. There's too many overlaps, too much overlap. It's way too close to these lows over here. Not a good place to enter. And then you see what happened. We broke the trend line, and we got stuck in this what I call congestion. But this is another breakout pullback short, and you got to be thinking we're probably coming down here. I actually had this down here at that time because you had the most touches down here. So there was enough room to think you're probably going to come down here and touch this. So I like this one. Plus, that's the first break, so generally you're going to get a retest of the lows. And you notice we came on down here and retested. And we actually tried to make two. We made one leg, and then we tried to make another, but it just couldn't hold on. You know, couldn't go any lower. It was too much support down here. And then the market bounced back. So I like that short, and that was the reason I didn't like this one, is because it was just, this is what usually happens. It usually gives short right there, and then you get hung up in this stuff, and you never know if it's going to go higher or not. And so it's better just to wait and see if you get a breakout pullback short. And then you also want to make sure you got enough room to scalp out before you get to the next strong support area, which would be where you got the most touches, which was right here. So then we got the bounce. We went into this and notice this little failed break lower. We ticked up. We tried to go lower again, and then we reversed. I like going long again above the little doji because it gives you a real tight stop. That's a little more aggressive. You might have wanted to wait and see if we got a bullish bar, so you might have gone long here, but then you're getting really close to these highs. But you got to figure with a double bottom here and a failed break lower that we're probably going to at least correct a little bit. And so if you went long there, you know, it's not a great setup, but it still fits. I really like the little doji right there. And you got this, you know, this trap here too. And so that sets that up pretty nicely in my opinion. And there's a breakout pullback long here, but we're not, there's your first two bars, so there's your trend line, so you're not coming off the bar, so I didn't like that one. And then you come down here and you got a little double bottom right at the EMA, a nice reversal bar. So this sets up at 1502, but guess what? This one didn't quite work out. Notice it was a 4-tick failure. And when you see that, when you go into that, let me get that out of the way. But when you're going like that, and then you go into all this congestion, these overlapping bars, that's not a good sign. And so you're better off just to get out of this trade. And so, you know, I exited. I think I got a tick or two out of this one. I can't remember exactly what I got, 1 or 2 ticks out of it anyway. You could have got as many as 3 ticks out of this, and you might have gotten out if you had your limit order, but mine didn't get filled. Actually, I didn't give it that much time when this ended, and we got kind of stuck here, and we kept testing this and bouncing, but couldn't go any higher. I was pretty concerned then that we were going to pull back and maybe turn down there, so I exited, and it turned out to be the right move. And if you didn't exit there, definitely when, you know, these next couple of bars, you definitely should have exited then. And you might have even considered going long if we'd have got a break above that bar, but we didn't. And even then, I wouldn't have done that because of all that overlap. It's just not a really good setup. That's, I mean, you can see that is easily a trading range, and you should be able to see that. So, but then you get your sell-off, and the first chance you get to go long is here, but you don't really have a good setup. So better to wait, and then all of a sudden you get the second entry here. But what I did was I entered on a limit order right here. Notice all those matching lows, and if you're paying attention, you look back across here, you see them again here. So we've really got a double bottom right here, and it's not easy to see if you're not paying attention or know what to look for. But that ticked 1 tick lower, and so you get in 1 tick from the very bottom. I know that's a little more difficult that's a more advanced trade, so I don't teach that, but I like to talk about it so you can start learning to look for it. But definitely when this bar completed, you wanted to go long in here. You really could have gone long above that bar right there because of that trap. But if you didn't, um, and what you could have done was when it broke higher was try to drop you a limit order in here, but I don't think it came back. I think once it broke higher, it closed up here, and that's as far back as it came. So a lot of times you risk missing those trades. And look what they did. They trapped everybody low over here. I don't know if the news has come out yet. Must have. Look at it go. And my guess is we're going to make at least a, we'll see what happens, but we'll probably, but yeah, they made that look real bearish, trapped everybody below that double bottom, and then they run it up. And they may trap everybody to the long side and turn it back down. But I'm guessing we're probably going to make another leg up like that one right there and test these highs before it's over. We'll see what happens. But anyway, and that was the last trade of the day. And it last one I'm going to mark because there's been no other setups really in here. I'm curious to see what this is going to do. We might just sit here and talk about this a minute and watch it and see what happens. But this is why you don't want to be in when this stuff comes out, because it'll whipsaw you in every different direction. And if the news has come out and that's the reaction we're going to get, it's pretty lame anyway. But, you know, there's no surprises really lately. When the FOMC really gets wild and woolly is when there's surprises. You know, people are expecting one thing and you get another. But there's been no surprises in the FOMC in forever. And, I mean, everybody knows the economy is in bad shape. And they're not going to be raising rates, at least not right now. And be my guess, you know, we can go look at the news a little later after this, you know, after you watch the video, if you hadn't already seen the news, to see what the rate decision was. But my guess is it's no change. And that's the way it's been. It's kind of been status quo for a while. So there's no real surprises. And without surprises, that's what causes the volatility, when people get surprised and everybody reacts and goes, oh, no. And then you'll have this huge reaction and you'll get this huge move, and then everybody go, oh no, we overreacted, and then it always takes it back. So that's another thing to keep in mind about news events, big news events that get emotional moves. Most of the time, prices will take that news move back rather quickly, like within 15 or 20 minutes, definitely within an hour, or sometime within the first few hours of that day after it comes out. Very rarely will you get a news event and it just starts trending and keeps going. It's very, very rare. Even if it's going to trend and keep going, what it'll do is it'll take that news event back, and it's like the market resets and gets to equilibrium. And then it says, okay, now now it's okay to go further down from here or further up from here. So, but emotional moves just do not last very long. And here's a good example. This was a very emotional move down right here, and look what happened. It took it right back. And that's what you will see. So anyway, just things that, you know, to learn, and that's why I believe in becoming a expert in a market. Pick your market. Mine's the ES, and there's several reasons. Mainly because of the volume and the fact that you can trade as many contracts as you're probably capable of trading and not worrying about slippage. But also the fact that, you know, if you watch this market every day, it becomes it becomes rather predictable, and that's, you know, that helps. And so every market has its own tendencies, although price action works exactly the same. But each market has its own personality and its own little quirks, and you'll learn them if you trade that market. But if you don't trade it every day, you'll get surprised by those things. And just to give you an example, like on personality, a failed break in the ES usually won't go more than a few ticks to a point, where a failed break in the euro might go 2 points before it reverses. So those kind of little things. But still, we know that most breaks fail, whether it's in the euro or the ES, and so hopefully that makes sense. But price action works the same in every market, but different markets have slightly different personalities, and you need to be aware of those before you go in trading them blindly. So even if you're a great price action trader, you need to know those tendencies. So anyway, this is about 20 minutes. I'm going to wrap it up. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.